Good morning. In today's market brief, we cover Infosys, TCS, Wipro, Marico, Trent, Apollo Hospitals, Reliance Jio, Bharti Airtel, PhonePe, Aditya Birla Capital, Bajaj Finserv, Maruti Suzuki, United Spirits, Persistent Systems. Let's dive into what moved and why. Infosys sentiment positive. Infosys announced a share buyback at around $800 per share, covering roughly 20% of equity. In simple terms, a buyback is when a company uses its cash to purchase its own shares. This can boost earnings per share and support the stock price. It also signals management's confidence in the business, especially helpful when global demand is mixed. The news has lifted sector sentiment and could prompt peers to consider similar actions. For investors, the key takeaway is stronger capital allocation and potential near-term upside, even as the firm continues to balance costs with growth. TCS sentiment positive. TCS inked a pact to deliver sovereign cloud-compliant hosting. Sovereign cloud simply means cloud that meets strict local data rules for governments and regulated industries. This move opens higher trust workloads and deepens TCS's role in public sector digitization. The opportunity is annuity-like, with multi-year contracts that can steadily add revenue. It also dovetails with broader digital public infrastructure in India. For investors, think durable growth and more resilient deal pipelines as agencies and enterprises adopt secure, compliant cloud architectures. Wipro sentiment positive. Reports suggest Wipro may consider a buyback, following the sector trend. Buybacks can be a useful lever to return cash, especially when revenue growth is slower and balance sheets are strong. This move could support valuations and reassure investors. The broader message from IT is, prioritize shareholder returns while investing selectively in growth areas like cloud, data, and platform engineering. Marico, sentiment positive. Marico will buy the remaining 46.02% stake in True Elements, a health snacking brand. Owning 100% simplifies decisions on pricing, product pipelines, and distribution, and lets Marico fully capture profits as the brand scales. It also aligns with the company's focus on value-added foods. For consumers, expect more innovation on healthy breakfast and snacking. For investors, expect a cleaner consolidation story and potential margin improvements as synergies are realized. Trent, sentiment positive. Trent is adding Toast, a new everyday fashion chain, to its portfolio. The company has a track record of launching a new retail format every few years, and this fits that playbook. The idea is to broaden customer reach and increase store density, complementing Westside and Zudio. Over time, more formats can mean better growth visibility and operational leverage. For shoppers, it's more choices. For investors, it's a longer runway of store expansion and concept innovation. Apollo Hospitals, sentiment positive. Apollo Hospitals will acquire IFC's 31% stake in Apollo Health and Lifestyle Limited for 1,254 crore. This move consolidates control over diagnostics and clinics, which are high-growth adjacencies to hospitals. More ownership means streamlined strategy and the ability to scale faster. Diagnostics has attractive unit economics and, combined with primary care, can drive steady growth. Investors can read this as a long-term value accretive step. Reliance Jio, sentiment positive. Jio is doubling down on artificial intelligence and cloud services to move up the value chain. This is about serving businesses with computing, storage, and AI capabilities, beyond just connectivity. With 5G and edge computing, demand for low-latency services will grow. If executed well, this diversifies revenue and can improve margins. Bharti Airtel, sentiment positive. Airtel's strategy also emphasizes AI and cloud, packaging enterprise solutions that go beyond SIMs and bandwidth. Think managed services, analytics, and secure cloud offerings. It's a logical path to monetizing networks and brand trust, with better profitability potential than pure connectivity. PhonePe, sentiment negative. RBI has imposed a 21 lakh penalty on PhonePe after supervisory observations. The amount is small, but it highlights rising compliance expectations for fintechs. For users, services continue as usual. For the ecosystem, it's a reminder that financial services require strong controls and governance. Aditya Birla Capital, sentiment positive. Among top issuers in primary markets coverage, AB Capital's activity signals that high-grade borrowers continue to tap debt markets efficiently. That helps fund lending and investment pipelines, which is supportive for growth. Bajaj Finserv via Bajaj Housing Finance, sentiment positive. Bajaj Housing's issuance presence underscores strong appetite for quality NBFC paper. Cheaper, steadier funding translates to competitive lending and steady AUM growth, especially in mortgages. Maruti Suzuki, sentiment positive. Maruti's leadership sounded upbeat on India's demand outlook. As incomes rise and roads improve, passenger vehicle sales tend to grow. The company's scale, distribution, and product pipeline position it to benefit from these tailwinds. United Spirits, Diageo India, sentiment neutral. Diageo India rolled out a carers leave policy. That's a positive on culture and retention, but not a direct earnings catalyst. Over time, good HR practices support brand and execution quality. That's your 10-minute pulse on India's markets and economy. Follow for sharp, simple, and actionable daily summaries.